Ladies and gentlemen, we are standing on the precipice of the greatest financial revolution in history. Forget the daily market noise. Forget the headlines distracting you. What's truly happening, beneath the surface, is a silent war for the future of money itself. Central banks around the world, the literal custodians of our economies, are scrambling. They're looking for a technology, a digital backbone, robust enough, secure enough, and compliant enough to handle the immense responsibility of managing national and global currencies in the digital age. And here's the bombshell very few people are talking about: they're not just looking. They're actively testing, piloting, and in some cases, already preparing to deploy one specific cryptocurrency, one distributed ledger, that will utterly shock everyone. I'm talking about Hedera Hashgraph HBAR. This isn't theory. This isn't speculation. Today, I'm going to pull back the curtain on the undeniable evidence that central banks are getting ready to use Hedera Hashgraph HBAR. And the implications for your investments, for the future of money, and for BAR's price, are monumental. You need to see this. Stay with me, because this news is bigger than you can possibly imagine. For years, the world of central banking has been opaque, shrouded in mystery. But today, we're cracking open that vault. You're about to discover how Hedera Hashgraph HBAR is not just an altcoin. It's becoming the silent, indispensable infrastructure for the very foundation of global finance. We'll expose 1. The Australian breakthrough, the first central bank actively piloting Hedera Hashgraph for its wholesale CBDC, with concrete details of the project. 2. The European connection, how the digital euro and the Bank of England's initiatives are intricately linked to Hedera through a surprising interoperability giant. 3. The US angle, why the United States, despite its stance on CBDCs, is creating a perfect storm for HBAR adoption via regulated stablecoins. 4. The Gilbert-Verdian blueprint, a shocking statement from a global financial authority explicitly naming Hedera Hashgraph as the go-to for speed and efficiency in central bank-level operations. And 5. The future of trust, how HBAR is set to become the ultimate trust layer for tomorrow's tokenized world, from assets to national currencies. This isn't just breaking news. It's a masterclass in understanding the evolution of money and positioning yourself at the forefront of the greatest wealth transfer in history. Prepare for a paradigm shift, because central banks are getting ready to use Hedera Hashgraph HBAR, and the implications for your portfolio are about to become crystal clear. Let's jump across the globe to the land down under Australia. On July 10th, we got a massive update on something called Project Acacia, spearheaded by the Reserve Bank of Australia, Australia's central bank, and the DFCRC. This isn't some whispered rumor. This is public information from a leading global financial authority. And here's the bombshell: one of the main cryptocurrencies, one of the primary distributed ledgers they are actively piloting for their wholesale CBDCs, is Hedera Hashgraph's very own DLT. Now think about that. A major central bank, directly testing Hedera Hashgraph HBAR for the future of its national digital currency. But what exactly are they piloting? Are they just kicking tires? Or is this a serious, large-scale integration? What kinds of real money, real asset transactions are involved? And how does this single central bank's decision, so early in the game, open the door for other massive central banks like the Bank of England and the European Central Bank to follow suit with HBAR? The scale of this initial central bank adoption, once we peel back the layers, will absolutely shock everyone. But first, let's dig into the specifics of Project Acacia. Project Acacia, a joint initiative between the Reserve Bank of Australia and the Digital Finance Cooperative Research Centre, supported by key Australian regulatory bodies like ASIC, APRA, and the Treasury, is a monumental step. It's highlighted in the government's March 2025 statement on developing Australia's digital asset industry. They've selected 24 initiative use cases, including 19 pilot cases involving real money and real asset transactions, and 5 proof-of-concept cases with simulated transactions. These use cases cover a range of asset classes where Hedera is already dominating: fixed income, private markets, trade receivables, and critically, carbon credits. And here's the kicker: the issuance of their pilot wholesale CBDC for testing use cases will occur on a range of DLT platforms, and the very first one mentioned is Hedera Hashgraph. This means HBAR is not just an option, it's a leading candidate for one of the world's most advanced CBDC pilot programs. This is a central bank actively putting Hedera through its paces, handling real value. This isn't speculation, it's a testament to Hedera's efficiency, its security, and its compliance capabilities that set it head and shoulders above the rest. But this Australian connection is just the tip of the iceberg. What about the biggest central banks in Europe? While Project Acacia is a game changer, the eyes of the financial world are also fixed on Europe. We know the digital euro is coming, with a deadline set for October of 2025. Christine Lagarde herself has been clear: things are moving fast. Similarly, the Bank of England has been deeply involved in Project Rosalind, exploring how central bank digital currencies could support a more digitized economy. But here's the crucial question. How do these colossal institutions, operating at the very heart of global finance, potentially connect to Hedera Hashgraph HBAR? The answer lies in a powerful, often misunderstood interoperability layer known as Quant Network. Quant isn't a distributed ledger itself. It's an overledger system, an interface, like Google for the internet, but for the entire DLT space. And Quant has deep, active collaborations with both the ECB and the Bank of England. But how does Quant's involvement, and the words of its CEO, Gilbert Verdian, directly link these central bank giants to Hedera Hashgraph? The implications for BAR's future are far more profound than you can imagine. Get ready for the next level of revelation. Quant Network is that connective tissue, the Google for the DLT space, allowing central banks and financial institutions to seamlessly interact with multiple distributed ledgers without getting bogged down in individual complexities. And here's the bombshell. Last month, the ECB announced Quant as a pioneering partner for its digital euro project, alongside almost 70 other market participants. Quant also proudly collaborated with the BIS, Bank for International Settlements, and the Bank of England on Project Rosalind, providing the technology for a CBDC API and platform. But the direct link to Hedera Hashgraph HBAR comes from none other than Gilbert Verdian, Quant's CEO and a highly respected figure in the DLT space. He explicitly stated, and I quote, "If you need to do something fast, you don't use Bitcoin, you use Hedera Hashgraph, for example." He's a known fan of Hedera Hashgraph. This isn't just a casual mention, it's a high-level endorsement from an interoperability giant actively working with the very central banks exploring digital currencies. It's not out of the realms of possibility that through Quant, the ECB and Bank of England will connect and utilize Hedera. This powerful combination of central bank involvement and a critical interoperability layer puts HBAR in an unrivaled position. But what about the US approach to digital money, and how does it secretly benefit Hedera even more? The United States has taken a different approach to central bank digital currencies. While many nations are exploring sovereign CBDCs, the US has largely indicated it won't be going down that route directly. Instead, they're leaning heavily into regulated private stablecoins. Now you might think, how does a lack of a US CBDC benefit Hedera Hashgraph HBAR? This is where the subtle genius of the market plays out. Effectively, regulated stablecoins in the US will have many of the properties that CBDCs have: stability, digital transferability, regulatory oversight, but they won't be issued by the Federal Reserve itself. This creates a massive opportunity. Why are stablecoins on Hedera, like USDC, seeing exponential growth? And how does this unique US regulatory environment, combined with Hedera's compliance-first approach, create a perfect storm for HBAR to become the trusted layer for a multi-trillion-dollar market? This is an unseen advantage that few investors truly grasp, and it's set to propel HBAR to new heights. We've seen it firsthand. USDC on Hedera has exploded, up over 362% in the past month alone. That's more growth than most other chains in terms of stablecoin volume. Why? Because Hedera provides the speed, the security, and the low predictable fees that enterprises and financial institutions need to issue and transfer regulated stablecoins at scale. When the US prioritizes regulated stablecoins over direct CBDC, it creates an enormous market for platforms that can handle this volume compliantly. This is precisely why Hedera is positioned to become the premier trust layer for the digital dollar, and eventually, other major digital fiat currencies. Its Hedera token service allows for the seamless creation and management of these stablecoins, while its underlying hashgraph technology provides the speed and finality required for mission-critical financial operations. This isn't just about consumer payments, this is about wholesale interbank settlements, enterprise treasury management, and institutional DeFi, all powered by HBAR. The more stablecoins are used, the more HBAR is consumed for network fees. This undeniable utility, driven by the US market, is another massive catalyst. But there's a bigger foundational reason why central banks need Hedera's unique properties, something beyond just speed or stablecoins. In the digital age, trust is paramount. For central banks, maintaining absolute integrity of financial data is non-negotiable. Every transaction, every asset transfer, every digital currency issuance, it must be verifiable, immutable, and resistant to manipulation. This is their absolute core mandate. But as money becomes increasingly digital and crosses borders on distributed ledgers, how do these monolithic institutions ensure that the underlying technology provides the highest level of trust and security? Most DLTs make trade-offs, security for speed, or decentralization for scalability. But central banks cannot afford such compromises. Why is Hedera Hashgraph's unique architecture, its gossip about gossip consensus mechanism, fundamentally superior in providing the ironclad trust and verifiable data integrity that central banks desperately need? And how does this core technological advantage position HBAR to be not just one option, but the preferred option for the future of sovereign digital money? The answer lies in its fundamental design principles, which set it apart from everything else in the crypto world. The secret sauce is Hedera's patented hashgraph consensus algorithm. Unlike traditional blockchains that rely on slow, energy-intensive mining or staking, Hashgraph uses a groundbreaking gossip about gossip protocol. This means transactions are processed in parallel, reaching finality in seconds, with incredibly low, predictable fees. But here's the game changer for central banks: it offers asynchronous Byzantine fault tolerance, ABFT. In plain English, ABFT is the highest possible level of security for a distributed system. It means the network can guarantee transactions even if malicious actors try to corrupt it. This is why Hedera Hashgraph isn't just fast, it's fair, secure, and provides true data integrity, something central banks absolutely demand. When you're dealing with trillions of dollars, with national economies, you cannot have a system that could potentially fork or lose transaction history. Hedera's unique architecture ensures every transaction is ordered fairly and becomes immutable almost instantly. This is why it's becoming the ultimate trust layer. From Project Acacia's wholesale CBDC pilot to the potential for the digital euro and Bank of England using it via Quant, Hedera's core technology is precisely what these institutions need. This foundational trust layer is why HBAR is about to become an indispensable asset globally. But the real question is, how does all this global central bank interest translate to BAR's price and your portfolio? We've detailed the active pilot programs, the strategic partnerships, and the technological superiority that Hedera Hashgraph HBAR offers to central banks. But let's connect the dots to your wallet. What happens to the price of HBAR when a central bank, even a single one like the Reserve Bank of Australia, officially deploys its wholesale CBDC on Hedera's distributed ledger? What happens when a global financial institution starts issuing major stablecoins using Hedera's Compliance Studio, as the US legislation mandates? Every single transaction on the Hedera network, regardless of who is performing it, whether it's a multi-billion-dollar interbank settlement or a tokenized carbon credit, requires HBAR to pay the network fees. This is called utility demand. When central banks, governments, and major financial institutions move to real live high-volume transactions on Hedera, the demand for HBAR will experience a shockwave of unprecedented magnitude. But how high can HBAR truly go when this demand hits? And how quickly will this all unfold? The numbers will utterly shock everyone. Get ready, because the climax is here. My friends, the evidence is undeniable. The Reserve Bank of Australia is piloting Hedera Hashgraph HBAR for its wholesale CBDC. Quant Network, a key partner for both the ECB and the Bank of England, is actively showcasing Hedera's speed and efficiency. The US regulatory environment for stablecoins is creating a superhighway straight to BAR's Compliance Stablecoin Studio. This is not speculation, this is convergence. When central banks, with their trillions in assets and billions of transactions, begin leveraging Hedera's unique hashgraph technology for real-world, live operations, the demand for HBAR will be unlike anything we've ever seen. Every single transaction, every settlement, every tokenized asset, every digital currency issued on Hedera will require HBAR for fees. This creates a relentless compounding utility demand that will drive its price to levels that will shock everyone. This is the moment when HBAR transcends being just another crypto asset. It becomes the foundational trusted layer for the future of digital money. From national currencies to global trade, from wholesale finance to the tokenization of all assets, HBAR is literally positioned at the epicenter of this global financial transformation. The central banks are laying the groundwork. They are getting ready to use Hedera Hashgraph HBAR. And when they fully unleash this technology, your portfolio will feel the seismic shift. This is not just big news, it's the biggest news you've heard about HBAR all year. Don't be sidelined. This is your moment. You now possess an unparalleled understanding of why central banks are getting ready to use Hedera Hashgraph HBAR. You've seen the evidence, the technology, and the undeniable path to its explosive growth. You have an unfair advantage in the market, seeing the seismic shifts before anyone else. If this video has transformed your perspective on BAR's true potential, if you're ready to position yourself for generational wealth, then smash that like button right now and subscribe. Join our community of informed investors who are seizing this revolution. And to complete your mastery of Hedera's unstoppable ascent, you must watch our deep dive into its market charts and specific price targets for a new all-time high. Our last video, Hedera HBAR price prediction, new all-time high incoming, is the perfect next step. The link is on your screen now and in the description below. Don't miss out on the full picture of BAR's inevitable future. Click that video now, and let's unlock the next level of HBAR insights together.